Imagine you could invest in the AI boom without buying another Nvidia, AMD, or Dell. There is a company sitting one layer underneath the AI revolution, making one of the most important components that powerful AI systems simply cannot operate without. That company is Micron Technology, and the story has changed dramatically. Micron just reported record fiscal third quarter results, with revenue reaching about $41.5 billion, while its outlook for the following quarter points to roughly $50 billion in revenue. But here is the big question. After such an enormous run, is Micron stock still worth buying in 2026? Or has the AI memory boom already been fully priced into MU? Let's find out. Micron is best known for memory chips, especially DRAM and NAND. But the product investors should pay the most attention to is HBM, or high bandwidth memory. Why? Because modern AI accelerators need enormous amounts of extremely fast memory. The more powerful AI models become, the more data these processors need to access quickly. And that makes high bandwidth memory increasingly important to the entire AI infrastructure chain. So while Nvidia gets much of the attention for its AI GPUs, Micron is helping provide the memory that allows those GPUs to operate at extreme performance levels. And that creates a very interesting investment thesis. Micron isn't trying to build the next ChatGPT. It is supplying some of the critical hardware underneath the AI revolution. And demand right now is extraordinary. Micron's fiscal third quarter revenue reached approximately $41.46 billion, compared with $9.30 billion a year earlier. Its gross margin was also above 81%, showing just how dramatically pricing and product mix have improved. Then came the really important number. Micron guided for approximately $50 billion of revenue in fiscal fourth quarter. That's an enormous jump, and it tells us something important. AI memory demand isn't simply growing. Right now, it is creating a major supply-demand imbalance. Micron has indicated that demand for its HBM products is extremely strong, with supply commitments extending through 2026. And this is where Micron's story becomes much more interesting. For years, memory chips were viewed as a highly cyclical commodity business. Prices could rise sharply when supply was tight, then collapse when manufacturers produced too much inventory. That cycle created enormous volatility for memory companies. But AI could be changing the economics. AI servers require dramatically more memory than traditional computing systems. As AI models become larger and AI infrastructure expands, memory requirements increase as well. That means the AI boom could potentially create a much larger and more durable memory market than previous technology cycles. And Micron is positioning itself directly in the middle of it. The company recently announced something that could become important for its long-term future. Micron plans to invest $10 billion over the next decade into a new US-based research organization called Micron Research Labs in Boise, Idaho. The goal is to develop next-generation memory, computing, packaging, and semiconductor technologies. That isn't going to transform Micron's earnings tomorrow. But it tells investors something about management's strategy. Micron doesn't want to simply benefit from today's AI memory boom. It wants to help develop the memory technologies required for the next generation of AI systems. And that could become a significant competitive advantage over time. But now we need to talk about the biggest reason investors should be cautious. Micron's spectacular numbers also raise expectations. When a company grows revenue this quickly and margins expand this dramatically, investors naturally start assuming the good times will continue. That's where the risk begins. Memory is still cyclical. If AI infrastructure spending eventually slows, memory demand could weaken. And if Samsung, SK Hynix, Micron, or other manufacturers significantly increase production, the current supply shortage could eventually turn into oversupply. When that happens, memory prices can fall quickly. And because memory prices have a major impact on Micron's profitability, earnings could become much more volatile than investors currently expect. There is another risk. The stock itself has already experienced an extraordinary move. When expectations become extremely optimistic, even a great company can become a risky investment if the stock price moves faster than the underlying business. In other words, Micron can execute extremely well and the stock could still disappoint if investors were expecting even more. That's why I wouldn't look at MU simply as an AI stock. I would look at it as a combination of an AI growth story and a highly cyclical semiconductor business. And that distinction is extremely important. Now let's look at the bullish case. The bullish argument is straightforward. AI spending continues. GPU shipments increase. Each generation of AI accelerators requires more advanced memory. HBM demand remains stronger than supply. Micron continues gaining share in high-value memory products. Pricing remains strong. Margins stay elevated, and the company's massive investments allow it to expand capacity and develop next-generation memory. If those conditions persist, Micron could potentially generate extraordinary earnings and cash flow. And we are already seeing evidence of that. Micron generated about $25.4 billion in operating cash flow during fiscal Q3, according to reported results. That is a dramatic improvement compared with previous periods. But there is also a bearish scenario. AI infrastructure spending slows. HBM supply catches up with demand. Memory prices weaken. Margins contract. Capital expenditures remain high. And investors decide that Micron's earnings peak has already passed. In that scenario, MU could experience significant volatility even if the long-term AI story remains intact. So what should investors actually watch from here? I would focus on 5 things. First, HBM demand. Second, memory pricing. Third, Micron's gross margins. Fourth, capital spending and free cash flow. And fifth, management's commentary about future AI demand and supply. Those 5 indicators could tell us much more than simply looking at the stock price. And there is one more factor I find particularly interesting. Micron doesn't need AI spending to remain explosive forever. It simply needs AI memory demand to remain strong enough to support attractive pricing and healthy returns on its enormous investments. That's a much more reasonable investment thesis. So, is Micron stock still worth buying in 2026? My answer is this. Micron is one of the most compelling ways to play the AI memory boom, but it is no longer an obvious bargain simply because the business is growing rapidly. The opportunity is real. The technology is critical. The demand is extraordinary. And Micron's financial performance has demonstrated what happens when AI demand collides with constrained memory supply. But the risks are real too. This is still a semiconductor company. Memory remains cyclical. Competition is intense. Capital requirements are enormous. And after a huge stock rally, valuation and expectations matter more than ever. So rather than asking whether Micron is a good company, investors should ask a much harder question. How much future AI growth is already priced into MU? Because if AI demand keeps surprising to the upside, Micron could have much further to run. But if expectations have simply moved too far ahead of reality, even strong earnings might not be enough. And that's what makes Micron one of the most fascinating AI stocks to watch in 2026. Nvidia may build the brains of AI. Dell may build the infrastructure. But Micron supplies the memory that helps those brains actually work. The question is whether that makes MU the next major AI winner, or a stock where the biggest opportunity has already been priced in.